Good morning and welcome to today's pre-market report. Now in today's pre-market report, we'll take a look at Bharat Petroleum, its results analysis plus equity plus option trading plan for it. After which we'll take a look at the Nifty Expiry, at what you should do whether you're an intraday option buyer or intraday option seller, plus the trading plan based on my levels and my indicators. Now before all that, let's take a quick look at the news. Now as I've said this whole week, the news this week is going to continue being Trumpy and Nirmala Sitharaman. Now, Trump's inauguration is over, and the only thing which is really left about Trump right now is the threat he's putting of tariffs, as he has said that on Feb 1st he might put 25% tariffs on Canada and Mexico and 10% tariffs on China. Now, most will wonder how will this affect the markets. Now, as of when I'm recording this video the night before, the American markets are still in the green, deep in the green, according to me. And the reason they're not taking this thing so far seriously is, number one, everyone expected him to put tariffs. He's been singing about it from a long time. He did it in his last presidency. Number two, there's a lot of posturing going on right now. This is, if he wanted to put the tariffs immediately, he could have. But he has said that he wants to, and now he wants basically these three countries to come to the table and negotiate with him, and then he either puts lower tariffs or backs up the tariffs fully. Canada has already responded. Trudeau has said that if America decides to put tariffs on Canada, Canada will be doing the same and putting tariffs on America. So I think Canada and America will not be really able to negotiate under Trudeau, because Trudeau and Trump don't like each other. But I believe with China and Mexico, with Mexico has not even spoken, a bit of negotiation will happen, and that's what Trump wants. Now also the budget, now we have done the inauguration, the biggest risk factor of the Trump swearing in has crossed, and now especially due to Nifty Expiry today, I expect two channels which are famous for putting a lot of rubbish through, CNBC and Z Business. They put on a lot of rumors and everything, and they'll start doing that for the budget. So all that will start driving the market, but the good thing, it will end up creating market volatility, which for day traders is perfect. Now obviously they'll try to put a bullish story, as we all know who CNBC's owner is and everything, and due to all of that they'll put a bullish rumors about the budget, and they will try to drive the market up. So that is one thing which will be in focus in the coming trading sessions, not only today. Now that's it really on the news front, and now let's take a look at BPCL, then we'll take a look at Nifty. Now BPCL released its results yesterday, and I believe the results are fantastic. The profit rose by 94%, revenue rose, EBITDA rose, margin rose. Now if you look at the revenue specifically, the revenue growth was primarily driven by improved refining throughput and strong market sales. The year-on-year revenue base quarter-on-quarter increased, but year-on-year declined slightly, but that was rather due to global crude oil prices and demand due to all what has gone on in the past year. And then on the profitability part, profit after tax has grown both on a year-on-year and quarter-on-quarter basis due to better GRM, gross refining margins, and better cost control. On the operational front, there has been a decline in the throughput, but I don't think it's something which people are really going to pay attention to, because they'll also be looking at BPCL giving a 5 rupee dividend, and BPCL is not an expensive stock compared to the other ones which give 5 rupees and their price is 7,000-8,000 rupees. BPCL is 277, so it makes a bit more sense. Not a lot of sense, but makes more sense than the others. So the key takeaways, I would say, strong quarter-on-quarter profitability, substantial quarter-on-quarter growth in the PAT, and also the EPS is showing good amount of cost control, and everything is going on. Dividends will be welcomed by people. So very good numbers according to me from BPCL. So what's now the trading plan for BPCL? Now how I'm going to be trading it is, I have already taken a position in it before the results came out. I took it in yesterday's expiry. I ended up selling puts below 272 support. Why I did so, as my logic was, since the results were not out, and in fact most of the forecasts were not this good. Forecasts were rather average, which everyone was giving. But my logic was simple, that number one, we have managed to have a big fall. BPCL has managed to fall from basically 380 rupees to 260 rupees. So this is a big fall that has happened. It's been rather one way. There's hardly been any bounces up or stagnation. So in my point of view, we were going to, even if the results were average, we would try to form a box range. Technically, the box range should take the support of 260 and 255, but due to this last attempt of it going, and the volume has come neutral. Before it was purely bearish, now there's bullish coming in and some days, and bearish coming in and some days. That showed that the box range might not even, you have to use this support, but might use 272 support, and that is why I went and sold puts below it. So my positional trading plan is, I've already entered the PE cells in Jan series, but there is not much time left, so I also entered some in Feb series. So I'm going to allocate 100 rupees. I allocated 40 in Jan and 60 in Feb series. Now those PE cells will be sent to a profit most likely at open today, and I'll put a profit stop to guard those gains. And for the Jan ones, I will exit them before the expiry day, naturally due to margins and everything go up as we get closer to expiry, so as to avoid that, and the Feb ones will ride on. Now, if you're an equity trader or you're not got any position, now, if you're an equity trader, according to me, if it breaks 284, then it's a long to 300. If it breaks that, it's a long to 310. Once we reach this 310 zone, we've got the also 200 moving average above as a resistance. So this will end up coming a very strong resistance. So whenever we reach the zone, as I think we will reach it, then that is where I will start looking at fresh thing option cells on the CE cell side. This is as, yes, the results are fantastic, but I believe we're going to have a spurt and then we're going to have a cool off. Simple, because as I said in yesterday's video, people don't like to admit it, but the Indian market is in a bear market. Look at the sectoral indexes, open something like Nifty Realty or any sectoral indexes, you don't have to even open that, and all have had an utter collapse. And you look at the stocks, they've had an utter collapse too. So, if you go, large caps have had, let's say, 30% roughly, when mid cap and small caps have gone up to 60%. So now that shows that the relentless selling from September has taken the market into a bear market. So that time good news does not last really long, and that's why once we reach this point, I will start looking at C cells. And equity buyers so have this zone to trade it. I did not enter equity position due to, I don't think the risk reward is right now favorable, plus I don't know how long the move will last, and I don't want to be stuck with the holding period rules. So option cells gives me that way to make the money and be able to exit at my choice of time, even if it can be tomorrow within 2 hours after open. If I believe we have it has done majority of the premium meeting, and I don't want to wait for, let's say we've eaten 60-70% of the premium and I don't want to wait for the rest 30%, then I'll walk out of it. So that's my trading plan. Option buying, this is only for intraday. I don't think you should try to do option buying in positional, because due to the results, if we break 284, then we go up straight, and then after that it will stagnate. So option buyers will end up getting killed. So that's my trading plan for BPCL. And now let's take a look at the Nifty. Now the Nifty basically has had a bad time, but it is sort of in the process of trying to find its legs on how to stabilize. So what is my trading plan for it today in intraday? Now intraday, according to me, as long as it is between 22,950 and 23,280, this is the box range zone in which you can expect dual way moves. Do not expect only up moves in this zone. Do not expect only down or clean down move in this zone. You're going to get both sides moves going on in a zigzag pattern. And so this is a zone in which scalp traders, why I'm saying scalp even though it's a big zone, let's say this move, you cannot call it more than a scalp and everything. So that is why I'm calling it a scalp zone. So intraday option buyers between 23,280 and 22,950. trade both sides, long and short. If it breaks 23,280, then it's a long, according to me, to 23,400 to 23,450, which is another very, very major resistance zone. And in fact, it's a resistance zone I've been maintaining with clients for a while, and you can see how well it's been keeping everything down. On the other hand, if we break that, then we go to 23,550. If we do not rise above 23,280 and instead go below 23,050, then we go to 22,950. And if we break 22,950 support, then we'll have broken a very, very major support, and it will sort of open a new bottom for the Nifty. And that can take us first to 22,880, which is more than a weak support. It will most likely be blown through, then 22,800 and 22,720. So option buying, simple, clean long above 23,280, clean short above 22,950, between the zone, trade both sides. Now what's my option selling trading plan? Now due to HDFC results that have been done, and BPCL results, for example, have come out good and everything, I'll be a bit more cautious on the call sell side. Plus, due to the budget coming up, as I said, I expect today, due to the Nifty Expiry, CNBC and Z Business will start putting out rumors, as the anchors are very shameless in doing so. I don't watch them personally, but I see it on Twitter so many times. They're promoting complete hypocrisy. So due to that, pressure can come on there to go up. So my point of view, I will end up, I will first wait. Usually you say I'll enter it open, but no, I'll first wait for, let's say, the first 15-20 minutes to pass. Then if I choose to be aggressive, I will sell calls above 23,400 to 450, but I will first see how we are dealing with this resistance, and sell puts below 22,950 at the same time. Now naturally, because it's expiry, your options are going to enter a profit pretty quickly. So as soon as I sell and they enter profit, I'll put a profit stop, as I don't mind entering again if I get booked out, but it's better to keep a profit stop than a loss stop on expiry day in my point of view. So as I said, 23,400 and above basically C sells, and 22,950 and below PE sells. If we break 23,280, then I will end up selling PEs of, let's say, 23,100 and below, because that allows me to go more aggressive on that side. As the profit, by chance, if there is a back fall, the profit stop will have cashed me out. So anyways, I'm okay. Why, when I have put 23,550 as a resistance, I'm still ready to sell above 23,400? This is, I believe, if you go to 23,400 and even then rise to 23,550, that zone will get pressure and it will sort of end up bouncing within 23,400, 550 quite frequently, or complete stagnation, which will end up helping option sellers on expiry day. So that's why I'm looking at that. If you're cautious, then sell C's above 23,550 and P's below 22,880. So that's my trading plan for the Nifty expiry. Hope it made sense. It's a bit more confused and complicated than it usually is, as it's all based on how it deals 23,280 and 22,950. So that's it. If you liked the video, hit that like button and subscribe to the channel, and also click the notification bell. Thank you.